Hello.
Hi, Ashraf. How are you, buddy?
Hi, how are you, Dale? Can you hear me?
Yeah, I can't hear you. I see ArcSoft, Magic Eye, Visual Effects. Thank you so much for joining us again today, Ashraf. You're one of my favorite guests.
That's what
You
you
have it
tell
all.
everyone.
Yeah, you have. No, I don't tell that to everyone. I really don't. You're unique. You have that combination of being a great analyst, great trader, insightful, and a good sense of humor. So, my view is that at times people take life and trading and everything else a bit too seriously. And although money is serious, it's not everything.
And thanks for all that you're doing too, for the little and for the not so little guy out there.
Okay, buddy. So I got a message from my producer, Mauricio Carrillo, that with the NFP tomorrow, you're very focused on the hourly earnings. You think that's going to be the bullet point of the report. Can you expound on that?
Yeah, well, it's interesting because, well, first of all, this is important. Let's just show the viewers. Can you see my screen?
I don't see a screen. I see ArcSoft Magic-I Visual Effects.
Okay, okay. Sorry about that. Sorry about that. Let
Okay,
me
and
let me.
I see your picture up there in another box, but no charts yet, partner.
Oh, oh, oh. Okay, okay, okay. Let me.
So you
Where
may have
is?
to stop the screen share for a minute and then go to the desktop you want to show. It's
Yeah,
that
where?
it's
Yeah,
that
here.
green box
Yeah, hold
with the
on.
white arrow, upper left-hand corner.
Yeah, 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 yeah. Let's do this. Let's do this, and let's do this. Okay.
We're in. Let's see. I just need to get mine out of there. So we want to show Ashraf's. So now we got it, buddy. So it looks
You got
like
it?
we have, there's a few things. Okay, now I see your desktop. I see everything, your Bloomberg. You did have a chart up there, but that disappeared with your.
All right. Now you see the calendar.
I do.
And the sound is good.
Sound is clean.
Very good. Okay, so well before we speak about the average hourly earnings and unemployment, uh, just say that this was a sort of a disappointing ISM figure here, ISM report. Not very bad, but the ISM it's still well above 51 and 52, but the prices paid index went to the lowest level since 2009,
Wow.
and the employment, which is important, the employment index in the services index went to the lowest level since in 2014. Now, so that's interesting because what happened, the Federal Reserve, it has a dashboard, it has a jobs dashboard, and it's been focusing on that, and the jobs have been growing very well. Then they cooled off a little bit, but what's really going to get them to change their mind and to want to raise rates, not change their mind, but to continue to raise rates, was a momentum following those CPI numbers and the core PCE. And the momentum comes in the wage pay, in the salary pay. And I think that we've seen some okay figures. So I think that if they do disappoint, I think it will really change the course of the story, because right now, the Federal Reserve, as it is right now, despite the recent improvement in data in the U.S., the situation is still quite questionable. With oil and companies coming down, and bond spreads pushing higher, and earnings is pretty much negative, or earnings growth. So here is the thing that I'm looking at right now. So
Okay,
average hourly
so
earnings.
the market, with the huge relief rally we've had in the market, it's been based upon that the Fed is done for a while. I mean, all the gauges are saying they may not even move until next year. So the market's expecting a pretty good report, right? That's the thing the Fed is hanging their hat on is employment. Employment has been the only thing really going their way. You point out what's happening in manufacturing. A lot of people are already saying we're in a manufacturing recession.
Yeah.
You point out prices are still not increasing. They continue to be quite soft. So tomorrow is an important NFP number based upon the Fed hanging their hat on one of the only measurements that they're looking at that's showing strength, being employment and wage growth.
Right. Not too hot, not too cold. But let me interrupt this broadcast. Let me interrupt this broadcast to say that look at gold.
Yeah.
Look at gold.
Okay.
Actually, let me interrupt myself. I like to do that. I don't let anybody do that, but I like to do that myself. Because we need to look at the gold chart, and then I'll go back to speak about those things.
Okay.
Less important in the immediate term. Gold is very big move here. Obviously, everybody's looking at this chart. I promise you guys, we're going to go and speak about much sexier things like jobs.
I think gold is sexy.
I know, I was being sarcastic, yeah.
Okay, so, I mean, you know, every bullion has its day, and definitely you can't argue with the price action, can you?
Yeah, you can't. I mean, look at this. Well, the thing is that, look, if you're a skeptical person, you would say, what is going to stop us that we didn't do here, that we failed here, we failed here, we failed here, we failed here, and now we're pushing higher. The good thing about this is that this consolidation here is doing well, and so it's a flag. You can call it a bullish flag, a pennant, whatever language you want to use. But if you go to the monthly chart, this baby, that's what I have other indicators that I look at that led me to, you know, further go in long gold, and that's related to a formula that I have between the gold bugs index and gold. It's a special formula that I have, but right now this thing is telling us this thing is going up, and again, you need to be skeptical. You have to be skeptical. You got to question yourself. So once again, oh wow, this is the monthly chart. The 55 moving average is coming down, is rolling over. That is true. What are we seeing here? We're testing the 100-month moving average. Why would we have to break it? Well, look at the channel. You have to be skeptical. You got to think not in terms of your portfolio. You got to think with logic. Not because you put money into something, then you let your mind just think that way, you know? So, you know, so basically, you know, when Trump asked Bush was like barely alive, Jeb, and he said, all right, had you known that there was had you known that there were no WMDs, would you have still gone in? And Bush thinks, my brother before logic, and he goes, yeah, I would still have gone in. And Bush, who was already sinking in the polls, said that, and he just dived 6 feet under. Never mind. So if you're looking at the market here, for those of you who do not see the reason and rhyme why I integrated that with this, and never mind. But if you basically, you know, just because you're long gold, don't try to always say, well, the chart is going to go my way because I have predetermined that I want to go in. Ask yourself, look at this channel. We failed. Why should we pass here? Why should we jump here? Well, look at these various levels of the momentum. Look at these various levels of the stochastics. Yeah. In the English language, we have done what you call a break. So we have broken here. These are actually my own stochastics. And so basically you've got a high here and bingo. Okay, nice. We've broken this one.
Nice look.
I'm sorry?
Nice look.
We're looking at this, and we did not break the momentum here. We didn't break the momentum here. We did not break it here. We did not break it here. We broke it here. But still, the road is still high, still long. This is not over. We're not talking about $2,000 or $5,000 gold. Take it easy. Gold bullion, you know, gold is not the most liquid thing. It can smack you in the face just when you start to believe in it. Just when you start going to, you know, it will smack you in the face. It does that. There's plenty of time and road and time on the calendar between this 1269 and between 1310. But
okay. Isn't what's a bit different this time, besides the technicals, is that before the recent rally that we've had here against the U.S. dollar, that gold was rallying in other currency terms, and now the dollar has finally joined the party, suffering or gold benefiting against the dollar, but the gold has been rallying against other currencies, global currencies, for well over a year or so, and now it's rallying against gold. So now it has almost a unanimous currency vote that people aren't trusting any paper, and they're buying gold.
yeah, I mean that is true. You know, gold has started to stabilize. It has been easier for gold to do well against the non-dollar currencies because the non-dollar currencies have been weak against the US dollar. So it's easy for the yellow metal to do well against the bad stuff, the weak
Right.
stuff. It is easy to beat up on somebody that is weak. You want to know how good you are? Come and go and fight the US dollar. So that's what the dollar. But you know what? Let me tell you something. No, I don't want to beat up on the dollar because the dollar has been having a bad 2 or 3 days. Why don't we beat up on the yen? So what I'm going to show you, I'm going to show you gold versus the yen. You want to go you want to go to the big time now. And this is what I said in my book. You got to look at the value of currencies. The best way to look at currencies, not against each other, but against gold. Okay? Because
What's
that's
the title of your book, Ashraf? What's the title of it?
It's currency trading and intermarket analysis. I mean,
Okay.
I'll show you the link here.
All right.
Look at this. Yeah, so basically, yeah, it's ashraflaidi.com, and you go slash and you go to book. Basically here. Anyway,
Okay.
so
I want an autographed copy.
okay, yeah, it's been a while since I haven't been to the U.S., so you know, I mean that would be a good reason. Guys, look at this. Look at this. Appreciate the plug. Appreciate in backing me up on the plug. Look, this is gold versus the yen. All right, this is the tough yen. This is the yen. So as you can see, the momentum still have not been broken. Okay, because
Right.
it's not easy to break above the momentum of the yen because the yen is strong. This is gold. All right, it's still. However, look at that trend line. Look at the red trend line. I promise you, I'm going to speak this 2 more minutes back about employment.
Okay. No,
but this is important.
This is important. I agree with you because this hasn't happened in a long time.
Yeah, this is a big deal. This is a big deal, and maybe not. I don't know. Some people have gold versus the yen. When I wrote my book, I didn't have these charts. I had to do it in Excel. But you know, but this is better. You know, now we're older and wiser. We've got a little bit more money, so we can do these charts, and it's it helps me. It helps everyone. So basically, if you ignore the trend line, then you're really talking about, some people could call it a pyramid. You know, you're talking about this, you're talking about that, you're talking about the trend line will be extended here, then you're talking about above this level. So we're talking about, but you know, if later on we start talking about probably 1260, 1275, 1285. Now, I want to take 2 minutes to speak about the fundamentals of gold, because the problem with fundamentals, it can always sound good. You can always make a story to sell your story. But the technicals is the one that differentiates this from that. So it differentiates, that is the one that highlights your case in a more unique sense. And I believe I did that in the momentum trend line in the stochastics for gold versus the dollar. Fundamentally speaking, here is the thing. Yes, the Federal Reserve is the only one in town that is thinking or talking or considering raising rates. But here is the thing. What is different this time, we have a very uniquely positive combination for gold. And I'll say this very slowly. A uniquely positive combination for gold. There's many reasons, but I'll tell you what. You know what it is, Dale? In 2010 and 2011, when QE was a novelty, it was a new thing. All right, it was a new thing. People were like, "Oh my God, we are shocked." Oh wow, there is going to be QE. They are going to throw money at the system. Gold goes up. But then they did QE1, QE2, Operation Twist, QE3, and the market became desensitized. from gold, and they realized that gold, that
Let
the
me
money that you.
guess. Let me guess. I'm interrupting you. Negative interest rates is the big deal.
No, it's no. I'm
Okay.
not that I'm not that predictable. I'm not
Okay.
that predictable. So one of
Because
them.
it really did light a fuse on gold when BOJ did that.
I actually disagree. When the ECB they cut interest rates, gold did not really move that much. When the BOJ did that, gold did not move right away. But it is moving. But I do agree with you. Negative interest rates, the idea of negative interest rates will help gold, but there is something else. And that something else is that, you see, negative interest rates is not by itself. Why? Because if negative interest rates is going to remain the case and inflation is going to remain below zero,
Right.
is going to be it's let's say inflation did not improve. Core PCE price index, the one that the Fed watches, did not go to 1.7. Let's say it goes to 1.1. The main reason that gold went down over the last few years was disinflation, because inflation went down.
Okay.
What we are seeing right now is a little bit more subtle. And what is subtle is that you will have negative interest rates and you will not necessarily have deflation. You will have inflation rising, but not enough to stop the presses, not enough to get the hawks panicking. It will be just enough inflation, just enough positive for the gold bugs to start re-embracing their religion. Okay?
Got it.
Their gold religion. Because the
Kind of
gold
a
bug,
stagflation environment.
you can say stagflation, exactly. You can say stagflation. For those who don't know what stagflation is rising inflation, but low employment, high unemployment, sub-trend growth. The only difference that I have with stagflation is because stagflation would be very high inflation or high inflation. I don't think we're going to be seeing necessarily high inflation, but I hope you've seen the point. Now, that's the fundamental explanation. And you and me and him and her and she and it can discuss about, well, what's enough, what's not enough, what's too high. So that's why I don't want to argue too much about that.
Okay.
The technicals that I've shown is part of the technicals that I'm going to share with my clients in my premium clients, but the other ones I will share later on.
I will push back a little bit on negative interest rates, because the bears' argument against gold for many years and decades was opportunity cost, because there was no yield on it.
Absolutely.
With negative interest rates, all of a sudden gold has no opportunity costs, because there isn't competition.
And I totally agree with that. I totally agree with that. Those are one of the first reasons that I always told people, look, they're going to cut interest rates. They're running out of the bullets. This is, and gold has to go up. However, that notion took a break. Why? Because even though they were cutting interest rates low, the substitution effect was supposed to be good for gold. Okay, inflation was low and it was deflation, and we had never seen negative inflation in the UK. We have never seen minus 0.2 inflation in the Eurozone. When we start seeing that, gold went down, and all the gold bugs started to scratch their head. But what's going on? Interest rates are low. They're running out of bullets. Why is inflation not gold? Why gold not up? That's why it's important to mention these things. It's very important to go into the heart of the matter and say why this is different than then. This is very important. That's what we do here. We trade this stuff. We talk about it in details. We don't waffle. We don't buffle. Okay. So if you want to talk, if you want to talk to me about gold, I'll take you to the jungle, to the sea, to the airplane, anywhere, and I'll talk to you about gold or about anything you want. But
then let me ask you one more question. When I was a young guy about 100 years ago, and I started off in the business, one of the celebrities of the business was a guy called Larry Williams. How he turned 10,000 into $1 million. And what
Yes.
I learned from Larry was he said stock market rallies were okay, but when gold is rallying with it, that there was something inherently wrong
Yeah.
with the equities because gold is like a thermometer.
Yeah.
The higher it goes, the higher the temperature the patient has. So,
Right.
any views on this recovery with S&Ps, and based upon what Larry Williams said, gold definitely is not only rallying with the
Yeah.
S&Ps, but outperforming and leading it.
Sure, sure, sure. A lot of people who may think that I am a chronically, structurally, ideologically bearish are wrong because we've actually given a trade on long the DAX, and we went long the DAX, we got out, we made money, and now we are short something else. Now, here is the trades. I'm going to answer your question, but before I answer the question, I'm going to go through it through basically, so there's
Yeah,
the DAX.
I don't know why people think that about you, Ashraf, because I follow your tweets and your work.
Oh,
You're a lot like me. We may be cynical and jaded, but we're not perma bears or perma bulls.
yeah,
We take the messages of the market and try and
yeah,
capitalize on them.
yeah. Well, look, this is a chart that I've shown um, in December webinar, and I've shown to my clients time and time again. If you are standing, make sure you're sitting, and if you're sitting, make sure you're not holding any coffee or anything hot, because the weekly chart of the S&P 500 shows as follows. The S&P, this is the S&P
Yeah,
chart. This is the weekly chart.
yeah,
That's where we are, a nice rally.
yeah.
And what we're doing here is very similar to what we did in 2007. And I've pointed this out. This is what people are wondering on Twitter. What's this thing you talk about, the 05-08 parallel? 2005, 05-08 parallel to me is the May 2008 parallel, which is basically shows that October, November of last year was very similar to May '08. We had a temporary rally. Now we are back. Now we are in June '08. What am I talking about? What are you talking about, Ashraf? I'll tell you what I'm talking about.
Okay, so you're using that fractal.
Yeah, it's a fractal. Call it a fractal. Call it whatever you want to call it. Yeah.
Okay.
So here's the thing. Yeah. Yeah. So you want to be fancy? Let's get fancy. Yeah. You want to use? Be
Okay.
careful. Ed Matz may sue you. Ed Matz, whenever you use the F word, he's gonna go after you. Okay. So, all right.
I love you,
So,
man.
so
All right, go
basically,
ahead.
the high in '07, we had the high. We broke below the 55 week moving average. We broke below.
Yeah.
We stabilized the 100. We failed the trend line. We built the trend line. Fell below the 100. Fell below it. Stabilized the 200. Went back up. Respected the trend line. Failed the 55, and bang. Really?
Nice.
Okay. So what
Yeah.
are we doing now? What we're
I'm
doing
guessing.
now? So we tried to
I'm
do this in
guessing without saying the
2011.
F word, like
We tried
Vincenti
to do.
Fox and Donald Trump says, they're all using the F word in politics now.
Yeah.
I'm
Well.
guessing that let's use similarities instead
Yeah.
of F. How about that?
Parallels.
Parallel. I love that. Yeah, parallels.
So
Okay.
basically, in 2011 we tried to do that, but we broke above the trend line. Why? I'll tell you why 2011 was not quite. And I was saying this back in October that this is not going to be 2011, and I'll tell you why in a minute. But let's look at now. Let's look at now. And here is the story. You do the high. You break below the 55, you break below the 100, you stabilize well above the 200, you break below 100. This time you do break above the 55 and you fail and you come down. Why? But what's different? Unlike 11, the 55-week moving average is humping down. It's turning down, so that's very different. It's turning down towards the 100. Now,
Okay.
long story short, here's what I said, and I'll tell you what I said here. You don't need to take my word for it. You just need to look at the evidence. and I actually gave this not to my clients, but I gave this to my free subscribe. Those who are members of the newsletter and who go to the website are not necessarily they're not paying subscribers. I put it on the free website. And what am I talking about? I'll tell you what I'm talking about.
Well, you know what? I nominate Ashraf Laidi for the Nobel Peace Prize for humanitarianism.
Thank you. Thank you. Now we're talking. Okay. So watch this. Watch this. February 11th. This is very important. China's FX reality. Where are we? Hold on a second. Be patient. February 9th. Do you believe in Yellen? No, I don't believe in Yellen. The central bank playbook from here. Watch, because I'm going to show you something that. Hold on. Okay, yeah, this one here.
Okay.
Just
that was when we cleaned out the stops under 1810 and the S&P.
Here, guys. All right. So February 17th. So in case somebody wonders, so Adam Button writes these things here, and I put the charts. So when the stock market was in 1926, when the S&P was in 1926, I don't usually do this sort of stuff. It may seem like, highly predictive or highly, casino. But I said we're going to go all the way up to 2015, 2015, maybe 2020, come down hard, stabilize, and then come down, okay?
Okay, 1620. When is St. Patrick's Day? Because I know the equinox is the 21st or 23rd. When's St. Patty's Day? So I could paint myself green. When is it?
Well, I think it's I don't know, the 15th, the 16th, the 17th, something like that.
All right.
I'm glad you asked that question, Mr. Pinkert, because May 15th, March 15th, it's the Ides of March, the Ides of March.
Right, yes. A2, A2, Ashraf.
Sorry?
A2, Ashraf.
A2,
Instead of A2 Brutus.
Yes, exactly.
Okay.
So, look, A2, yeah, exactly. Look, March 16th is the Federal Reserve. March 15th or March 16th, March 15th, 16th is the Fed day. The decision of the Fed is 16th, okay? The Chancellor of the Exchequer, the UK Chancellor, is going to release his budget on the 16th or the 15th. You have many other events. They're very, very big. There's a lot of speeches. We have the jobs numbers from the UK. When we were in 1920, we said we're going to go up, up. A lot of people said we don't have legs. Well, here is what the S&P is doing. We are in 1980. I think we're going to go here. We're going to go to our 1980. We're going to break below. We're going to test the 100-week moving average, and we're going to go in between the 55 and the 100. And I think that's where we're going to fail. And where are we going to stop? 220, 230? I'm not sure. It's going to be very tough. I cannot predict in accuracy.
That was an excellent call.
And in the Dow, the equivalent of the Dow is 17,200, I believe. It's going to be 17,200. All right. And the DAX, again, in the DAX, I think we are almost there. That's why we actually, when we took profit and we bought the DAX here, we bought the DAX. We tried to play it safe. We went here. We bought 95.20. We targeted 99.80. We didn't have the guts to wait, so we got out at 97.70. Okay. Where is the DAX doing now? The DAX is 97.40, so it's there. But we are shorting the FTSE. Okay. This stuff is pretty subtle. You have to be very subtle with these things. But anyway, so Mr. Pinkert, the story with the stocks, it's very tough when you're able to trade if you are bearish and you try to show off by trying to show how detailed you are on the corrective upside. That's very difficult, because especially if you have followers, if you give them a signal out there, because you don't know what leverage people are using. If you're doing it for yourself, that's fine. If you're trading yourself and you are bearish but you want to trade the bounce, that's fine. But I got a lot of people who say, Ashraf, what's going on? You got a 200 pip stop. I can't handle it. Well, I'm sorry, mate. Some guys.
Well, why don't you just tell them to reduce leverage?
Absolutely. So I tell them do two things. You reduce leverage, you reduce the size, or you have various positions, very small positions. Because you know what, Dale, I've got some people who complain and they say, why do you keep on getting out of positions? I said, I've just made 258 pips in Aussie yen. Why? He said, well, because my model, I put the system on your thing and I have to adjust. I said, tough luck, my friend. I said, you're only paying $90 a month and you're complaining? I give you the technicals, the fundamentals, the charts, and I give you 258, and you're going to complain to me that I get out 30 pips early and I do not deliver the promised 330 pip and I get out at 258 and you're complaining? It's incredible. There are some
look, Ashraf, I understand that. This is what I would say to these people. A lot of people would be happy just to get back to even on their accounts. And
anyway,
what I say to people is this, and one of my shortcomings is getting out before targets. But you know what? I'm still making money. And here's my Pinkertism: don't expect perfection at the craps table.
Absolutely, absolutely, absolutely. And I know these people are clients and everything, and there's only so much you can pander to clients, listen to the clients, but you have to put your foot down when it's warranted. Anyway. All right, so basically this is a story. Dollar yen was still short. You remember in December?
Yeah.
In December we said our favorite trade is going to be sterling Aussie. Sterling Aussie just fell around 800 pips or 700 pips. Going back to the job report, I think that pretty much the market is saying that yes, there is not going to be a rate hike in March, but that's not the first time that the market is at odds with the Fed. I think the Feds want to take a break from that. It will be very bad. It will be very bad news for the Fed if the job market is going to surprise on the upside. But to me, what I say is that as long as average hourly earnings, basically, and there's two of them. There is the year-on-year and there's the month-on-month. And what you need to watch out is basically the average hourly earnings. And by the way, there's no Canada job report tomorrow. There's no Canada. So it's all U.S. Average hourly earnings. So basically, this is expected to slow from 0.5 to 0.2. So if it does that, that's not going to be good news. But the year-on-year is expected to remain unchanged at 2.5, and that's not hard because year-on-year you're comparing it to far back, so it's not hard to have a high number. So that's something really to watch out for. The hours and the labor participation is important. So these are quite important, but I think that we're out. There's a notion that I would like to speak about, which is the following. If we are going to be long gold or favorable gold or bullish gold, then what do you do with the dollar? Does that mean you're bearish dollar? And it's
I'm glad you're going there. Okay, because when I look at the Dixie chart, that double top above 100, whether or not we pull back first, which I think we can do, to me it looks like it has destiny to clean out the dollar bears over par and a half. Yeah. And in tying it into gold, I'm thinking that that's what creates the pullback from higher levels in gold, is one more hurrah on the dollar above the Dixie 100 level. So
makes sense.
What do you think?
Makes sense. Look, this is the chart that I posted again to the free guys, not the non-paid guys, on February 19th. February 19th. This chart right here. So basically, this is the Dixie. Win Dixie. You remember that stuff? Okay.
Yes.
All right. Okay. So basically, you've got a down channel and an up channel. This is again February 17th, folks. February 17th. For those of you who have put this on mute, tough luck. Okay, so February 17th, you got a diamond. We broke this into diamond. We broke into diamond 2. We rested 2, and then we said, where are we going to go? Are we going to go to 3A or 3B or this one, 3C? And we anticipated that we're going to go to the top of the range. So that's where we are now. Here's where we are. Here's where we are. 1, 2, 3. Here's where we are. Here's where we are, and here's where we are. We are in the top of that diamond. Girl's best friend. All right. So we were here. We were here. We recovered here. I do not think the dollar is going to break above this diamond here. I don't think it's going to get out. I think we may push higher. However, but Ashraf, but if you say that stocks go up while the dollar go up, and if you say that stocks are expected to go further up and to correct higher, then don't you think that the dollar is going to push higher? Yes, Your
Right,
Honor.
right. That's exactly what I was going to ask you.
So, yes, Your Honor. Yes, I will not need my lawyer to speak. Let me speak. Okay, lawyer, give yourself a bathroom break. So, basically, I think the dollar could push higher, and it could fail around 99, 90, 100. I don't know. What may bring this up? Maybe a big upside in the job report? I don't know. Maybe what? Something else. Maybe things will be bad for the Fed, but maybe the European Central Bank on March the 10th will do something, right? So we don't want to speculate on fundamentals too much. Let's talk about the chart. And the chart is telling me that this could push higher. It could play around 99, 98, and then it could come down. And then when it come down, we don't know. Either it's going to stay into a new diamond here, all right, or it's going to, again, so just for you to look at the situation here, because a lot of people need to appreciate. Okay, just give me a second. So this is how it looks. This is how this looks. Okay, and okay. So basically, I think that we probably come down. Hold on a second. I'm having some alerts on my phone. Some moves. Some things are moving. Just give me a second, guys. I just need to do some. It's to do with the trade that I have.
Energy is exploding. Crude exploding.
Hold on, guys. Yeah, I've just got because I've got a few accounts here that I'm trading and hold on. Boy, oh boy, oh boy. All right, man, oh man, as David Letterman would say, man alive. Okay, 0.7. Okay, all right, 0.7. Okay, just give me a second. Sorry, guys. I've got some important business to attend. Basically, I've got to close some positions here. You know, you have to realize some gains while they're happening, and then you go back in. Hold on a second. Sorry, guys. I had some long Aussie and long Kiwi trades. Okay, just give me a second, please. Okay, so yeah. All right, guys. All right, so basically so the way I look at it is that, okay, this is the fundamental explanation about gold, about the dollar. Dale, okay, here's the situation. When the dollar in 2007, 2008, all right, I'm going to move the mic here. When the Fed started to raise rates in 04, 05, and 06, it was the first central bank that started to raise central bank, while the rest were, you know, were tired and sick and tired. But what does that mean? What does that mean? That also means, ladies and gentlemen, that it was first in, first out, FIFO. What does that mean? What does FIFO means? Because so the Fed was the first one to go in to raise rates, but it was the first one to get out. The Federal Reserve stopped raising rates in June 2006, right?
Yeah.
When it stopped raising rates in 06, everybody else was still raising. BOE, ECB, RBA, NZD, RBNZ, they all started to raise up into 2008. When the Federal Reserve was the first one that stopped raising rates, that means that was bad for the dollar. That's why the dollar was falling across the board in 06, 07, and part of 08. Are you following me?
Yes.
All right. The dollar was the first one to, the Federal Reserve was truly leading, was leading on the rate hike, and then it led on the pause, and then it led in QE. Well, the BOE did it, the BOJ did it, the ECB was last. When the Fed was leading in QE in March 09, it really started at December 08, the dollar was the first one to take the big hit. And that's why when the bottom, March 09, 666 on the S&P, everything started to go up against the dollar, because the United States Central Bank was the one that was leading in cutting rates.
Dollar broke 30%, S&P's rallied 30%. You had nominal gains.
Right. QE, the Federal Reserve was the central bank that was leading in terms of QE. So one way of looking at it is the one that was leading in cutting interest rates into negative. QE was zero interest rate, ZIRP, and the Fed was the one that was leading. That's why the dollar was the one that was taking a hit. Now here's what happened. That's why 09, 010, 11, 12, 13, the dollar was the classic funding carry trade currency. And that's why, ladies and gentlemen, when the stock market would go up, the dollar would go down. All right? It was the carry trade. It was the funding currency. Interest rates were low for a long time, and the Fed was the one that took us there. And then the ECB joined, and then everybody else joined. Now, what's going on now? Now, the Federal Reserve wants to be the first one. Now, we got to be careful. We got to listen to me very carefully. The Federal Reserve is the first one that wants to lead in raising rates. And that's why we're seeing what we're seeing. The dollar pushes up. When there is good stuff in the world economy and stocks, the dollar goes up, because it is expected to be the central bank, not only the first central bank that led us towards rate hike, but it could lead us towards further rate hike. And that's why the dollar is gaining. What does that mean? Drum roll. What does that mean?
Eventually, other central banks are going to have to tighten with the Fed if they continue.
Aha! Either that, or
the Fed does a trichet.
Thank you very much. Or the Fed is going to be the first one to go into the fetal position.
Yeah. Okay.
If the Fed is going to be the first one, well, not the first one, the only one, because everybody else is already in fetal position.
Yes.
For those of you who are not English or American and don't know what the word fetal, it's the first one that is going to go into a defensive position. It's the first one that is going to come down from its pedestal of higher rates. So when it's going to come down and join the rest, when it's going to come down from its Ivy League and join the other stinking currency, people are going to beat up on it, because it is the one that is falling hard, because it has more downside. The other guys do not have downside, and that's what the currency market does. It does not trade in absolute terms.
Reversion to the mean, buddy?
Relative terms. There is more downside for the dollar, so that's why I'm going to sell. So it's what either notion that you mentioned, Dale, which is the first one to continue to raise, or the first one to cut. And when that happens, gold is going to say, okay, baby, I'll take it from here.
Ashraf, another excellent interview. Speaking about fetal positions, your work is the umbilical cord for people to stay on top of important markets. And speaking of diamonds, Ashraf, you keep talking about diamonds in the Dixie. I say this, that when you listen or see Ashraf, he's as brilliant as a diamond. You better put on your shades. Thanks for another great, revealing, insightful interview. My trading warrior brother.
Thank you very much for what you're doing.
Inshallah, shalom, l'chaim, buddy.
Thanks, man. And wishing you better health, and keep doing what you're doing, as long as you like what you're doing. All right?
All right, partner, yeah. Breathing in and out, and my mission is to lift up others And I know that we share this as kindred spirits to lift up others. Thank you for all the great work you do, and thanks for coming back to LAR to edify my community.
Thanks, Dale. Thanks, FX Street. Thanks, everyone. Good luck, everyone, tomorrow, and after tomorrow, and after tomorrow. Take care, guys.
Buddy.
Take care.
Thank you, Ashraf. Everyone, thank Ashraf Laidi for another great presentation. In the live analysis room, you're not going to see better live analysis. And as I said, Ashraf insightful. I see some comments that you enjoy Ashraf's sense of humor. And I have to wrap it up here. No wrap up for me today. I'll see everyone tomorrow for the NFP an hour early with Adam Button, Yohei Elam, Valeria Bednarik, and the one and only Mauricio Carrillo. Good hunting, everybody. See everyone tomorrow, and stick around for Kathy. Kathy Lean is up. She's on deck. And when I get a base hit, there's no one better to come on and bring me around the bases than Kathy Lean. So stick around for Kathy and see everyone tomorrow. Adios.